roughly 90% of businesses don't have a business plan. I personally think a business plan helps with success because it does put markers, it does put goals, it does put projection revenue that you can look at.
Hey, everybody. Welcome to the Workergenix Mastermind. We have special guest Joe Walker with Joe Walker Marketing, who is an expert at helping businesses create business plans and know what track to do with their business so that they can be successful and know what they're doing. It also leads to other benefits of being able to help get funding, get investors and partners and things like that. We're really excited to have you on the podcast here, Joe, and learn more about what you do and how you can benefit business owners with business plans.
Thanks for having me, Harley. It's great to be here. Looking forward to telling people about what I do and see if I can help them with their business plans, especially going into first quarter of 24, right? Perfect time to be looking at business plans.
Absolutely. Now, when we get started here, I was wondering, Joe, do you have kind of like a real quick success story of like someone you've helped and that came to you and didn't have a business plan and what you were able to do to help them?
Yeah, I definitely do. Opening a barbershop during COVID. And right at the beginning of COVID, a contact of mine gave a referral. His name is John. John's a barber by trade, wanted to leave the barbershop he was at, needed funding to do that. He needed to buy all the equipment, get the lease, all that kind of stuff. So, and he had never been a business owner before. So working with John through his business process, writing the plan for him, presenting it to the bank. Obviously, beginning of COVID, and if everybody remembers back to COVID, I know it seems like it was forever ago now. Barbershops weren't even open, right? So you couldn't even go get a haircut. So going into a bank and saying, "Hey, John's looking to open his barbershop. Here's what he's looking for." The bank was just, "What are we doing here? Like, you can't even be open." But we were hoping that COVID would be short term, 60, 90 days. We wanted to get our ducks in a row. So that way, coming out of COVID, he'd be able to hit the ground running. Obviously, 90 days became 6 months, 9 months. But writing the plan, it wasn't a massive amount of money. It was in the five figures, but it wasn't a massive amount of money. But working with the banks, I think, honestly, the lender at the bank, his name is Chris. I work with him quite a bit. I think Chris got tired of me calling him every couple days saying, "Hey, how's that John loan going?" I think he basically gave the money to kind of quiet me down. But he also believed in John. He had met with John several times, and he was like, "Okay, we're gonna help him." It was a small local bank branch that likes to help local businesses, so they did give John the funding. He was able to open, absolutely crushed it, blew all the financial projections away. That has nothing to do with me. That has to do with John as the business owner. But the goal was in 3 years to open up his second shop. In less than a year, he was already starting to look for his second shop. The reason he hasn't done it is he hasn't found good enough barbers that he trusts to put into a second shop. But hyper accelerated the loan payoff. He's already paid the loan off in less than 3 years, built his credit back up. Bank is very happy with him as a client. They want him to open up a second shop because they want to do business with him again. So that's a great success story in that as a first time business owner, John had no idea on what was involved in writing the business plan and what was involved in getting the money from the banks. And I was able to walk him through that. I consider John a friend now. John still comes for me for help. Like, "Hey, I need an intro for a CPA, or I need an intro for this, or these different things." So again, I'm a resource for John now. He's not just a client of mine.
So do you think that having that business plan helped actually accelerate his success? Because he kind of had like the playbook of, hey, here's what I need to do when I, get up every morning. This is what I'm working towards, instead of just being like running a barbershop.
Definitely, I have it in my slides when we start going through it. But roughly 90% of businesses don't have a business plan. I personally think a business plan helps with success because it does put markers, it does put goals, it does put projection revenue that you can look at, snapshots in time. Am I on pace? Am I not on pace? Why? Those kinds of things. And for John's part of it, and John was not going for an SBA loan, but SBA loans almost 100% of the time require a business plan. So like if you're going for financing and it is an SBA route, you're more than likely going to need a business plan. And then even in John's case, where it wasn't an SBA loan, he still would have required the business plan anyway. So A, he needed it, but B, I think it also gave him a lot of peace of mind that, yeah, I actually can do this. And I do have some systems in place to figure this out. And I do have some checkpoints along the way to make sure I'm on track.
Yeah. I wonder too if like having the business plan is similar to how a lot of like mindset and business coaches talk about the importance of writing your goals down, and how when you start writing goals down, you kind of manifest those. And like I've seen that in my personal life with times where like, hey, I've got this particular goal in mind, I'm going to write it down. It's a little bit different than a business plan. It's just like a personal like achievement goal. And just the act of writing that down and having that something that you like look at every day, it helps make that goal be achieved so much more than if you just kind of leave it in your head and think, oh, I'm thinking about it and I kind of know what to do. Is that something like that you've seen kind of translate into like the business plan side of things?
Yeah, definitely. So writing it down makes it more tangible, right? Because now it's not just out there in space floating around. And I do actually have that in my notes. Like the example I always use when I'm talking with clients is New Year's resolutions, right?
Mm-hmm.
When you write down your New Year's resolutions, you're more apt to follow through with it. But on top of that, even more so with New Year's resolutions or business plans, when you share it with somebody, now there's accountability, right?
Right.
So if I'm writing the plan, I become a somewhat of an accountability coach. You know, it's no different than having the I want to lose 20 pounds by March on the fridge. And if your wife is seeing that as you're grabbing the Haagen-Dazs, you know, she can kind of accountability, hey, how's that diet going? But if it's in your head, I want to lose 20 pounds by March, and you haven't expressed that to your wife and you're grabbing a Haagen-Dazs, she can't kind of hold you in check with that,
Yeah.
even if it's in a funny, joking manner,
Right.
right?
So with these business plans, if someone's coming to you and they don't have one, and they're, do you hear people often have like an objection of, well, what if things change? What, am I locked into this business plan? Like, how does that work with, evolving businesses, evolving markets?
Exactly. So historically, business plans used to be these 10-year documents or 10-year visions, right? So, and nowadays with things changing so fast and internet and AI, you know, all these different factors that are coming in, business plans now are typically 2 to 3 year visions with a little bit of a focus on the 5 to 10 year vision. But even having said that, I tell people we didn't carve these things in stone. We didn't come down off the mountain with them. They're supposed to be living, breathing documents. Things change, things happen. It could be either internal or external. I want to hire 3 people in the next 6 months. Well, if you're not finding qualified candidates, you're not just going to hire because your business plan says hire, right? You're probably going to push that off some
Mm-hmm.
and readjust and tweak and move and motivate. You know, so the plans do need to become these documents that are a little bit lucid that can change. It happens.
Awesome. Tell us kind of what the general process is like when someone comes to you for help with a business plan. What does that process look like?
Right. It's a back and forth. I do have professional writers that work behind me too. So it's myself, and I usually assign one of my writers to be involved in the process also. So what happens is it's a back and forth. And what a lot of business owners get frustrated with a business plan because they Google it and they start writing it themselves. And they think they have to write section 2 before they write section 3, and they have to finish 3 before they finish 4. And with us, we honestly we don't even go in order. Start with part 5. And part 5 is the SMART goals and the SWOT analysis. And the reason I do that is I give it as a homework assignment. It's just a 2 by 2 table. And I say, you know, give me 3 to 5 strengths, 3 to 5 weaknesses, 3 to 5 opportunities, and, you know, in bullet form. And then
Mm-hmm.
we take that, that becomes an appendix in the document. And then my writer takes it and actually writes it in paragraph form in the plan. And especially for threats and weaknesses, a bank wants to see, okay, you've addressed this weakness, you recognize this weakness, but how are you going to overcome this weakness? A bank wants to see that. And same with threats. Okay, you've recognized these threats, but how are you going to overcome it?
Mm-hmm.
So it becomes a working document. So while we're writing that, they're working on their SMART goals, and then they present that, and then we have meetings with them, and there's a back and forth, and it's a usually a Google Docs that everybody can go in and edit, and everybody can go in and see. We're going through it as a process, so we tell them highlight, make notes, that kind of stuff. We're not going to get it 100% right the first time, but we want to do it in chunks. We don't want to just go write this 20-page document, and at the end of it, the client says, "What were you thinking?" You know, if we're doing it in sections, they can say, "Okay, you're on the right track, keep going." No, that's not really what I was thinking. And through the process, oftentimes things shift. You know, like big section of the document is products and services, understanding your products and services and how you price them. And a lot of times the clients aren't really sure how to price products, right? And that's a huge opportunity for us to start discussing it with them. And then the other big part of a business plan to come out of it too is what's called your UVP, your unique value proposition, helping our clients identify what their UVP is, because that's should become the hook for all your marketing,
Mm-hmm.
right? So, and again, those are pieces of the plan that over the course of writing it, hopefully become clarified. And then the last part with why we don't go in order. The first section of a business plan is the executive summary. Like, and when you go present to a bank, they're going to read the executive summary and they're going to look at the financials and they're going to decide if they want to read the rest of the document or not. But if you're writing a summary, you can't write a summary unless the rest of it's done, right? Because it's a summary. It's a explanation of everything coming behind it. It'd be, and the example I use is you can't make the commercial for the movie until you've made the movie. Right. So you got to make the movie, which allows you to make a commercial, which is the hook to get the bank to want to watch the movie. In this case, read the plan.
So you mentioned SMART goals. Can you explain that?
Yep. So SMART goals. So specific, measurable, obtainable, relevant, time bound. Those are SMART goals. So specific. And again, the clients will come up in bullet form. I come out of education, so I'll use an example. And when I taught, I always used to write this on the board as an example for my students. I want to graduate college. And I'd ask them, is this a SMART goal? And most of them would raise their hand and say, yeah, it's a SMART goal. And I'd say, no, it's not even close. So I want to graduate college in 4 years. Is that a SMART goal? A couple of hands will go up like, all right, now it's time bound. We got 4 years. But now I want to graduate college with a 3.2 GPA, majoring in business administration. Right now we're making it more specific. It's trackable, 3.2 or whatever I just said. You can adjust to that. If you're managing a 3.8 GPA, maybe you're aiming a little bit low, maybe you should raise your GPA. So again, SMART goals specific, the more specific, adding the GPA component, that makes it more specific. Adding the business management component makes it more specific. Is it measurable? Again, with the GPA, it's measurable. The 4-year term, the time bound, it's measurable. Obtainable. I always ask my students, you got to tell me if a 3.2 is obtainable or not. Some of you are 2.5s, and that's okay. You're still going to get your piece of paper when it's done. But, you have to figure out what's the best GPA for you. Again, walking them through that process. And usually when the clients submit their SMART goals or give us their SMART goals, we have to clean them up a little bit or ask qualifying questions like, what did you mean by this?
So when people come to you to get a business plan, are they typically doing this because they are needing funding, or what are some other good reasons that people should have a business plan?
So oftentimes it's for funding, and that, the terms I use is what I call internal consumption and external consumption. External consumption means they're looking to shop it somewhere. So sometimes clients will come to me and say, I need it for fill in the blank. They might be looking to sell.
Okay.
I personally would not buy a business unless I said, show me your plan. Show me where you're going with this thing. What am I buying? Right. So it might be to sell. It might be they're looking for partnership. They might be looking to bring somebody else on. Again, I wouldn't enter into a partnership as a new person without saying, what's the plan? What are we doing here? Show me the financials, show me our goals. So, but then the more typical is, yes, they're looking for funding. They're either looking to get in front of a bank or they're looking to get in front of angel investors or some other non-traditional funding. Another good example is nonprofits with grant writing. Grant writers often say having a business plan helps them write the grants. So I partner up with grant writers for that. So again, those are all some of the external. Internal, I think a business plan helps you sleep at night. I think it helps you have a little more understanding of where your business is going and the direction you're going and rhyme and reason. And that's what I call internal consumption, just peace of mind. But whether it's for internal or external, I write them the same because I've had clients before. Oh, no, I'm never going to show this to anybody. This is just for me. Finish the plan 3 months later. They're like, so I'm going to bring this plan to the bank. And I'm like, well, I didn't write it to go to a bank. Right. So then there's all this editing and tweaking. So I just write them all as though they're going to get presented to somebody.
Yeah. So is a business plan for someone who is just kind of tossing around some ideas of, hey, what do I want to do next? I've got kind of an idea, like I want to, be a landscaper maybe, or is it more of like, hey, I've been a landscaper for 3 years and it's just me, I'm looking to grow and, make this a real legitimate business with employees and stuff. I need some funding. I need a plan. Or is there some other, like, when do people need to get a business plan?
So let me put the not great on there first. So the guy who is a plumber and he's been doing it for 20 years and he has his truck and he has his one employee, he's probably not going to ever see the value in a business plan because he sits down at the end of the year and on a napkin in a restaurant somewhere, he kind of figures out the next year and he's probably pretty close just because he knows his business so well. I'm not saying they don't need a business plan, but he's probably not going to necessarily see the value in it.
Mhm.
The more the person that I think sees the value in a business plan is, like you mentioned, the startup that, go back to my example of John, he needed to get in front of a bank for funding, and or that business that's been around for 3 to 5 years and they're sitting around. They started it not as a hobby, but they started it thinking they're going to be able to make it. I always use the example of the guy who owns a truck and a trailer. So he buys a lawnmower and some signs, and now he's a quote unquote landscaper, buys some shirts. Now you fast forward 3 years and he's got, 60 accounts and 2 part-time employees. And he's sitting around saying, oh, wow, I'm actually a landscaper. Like, this is
Mhm.
actually working. I'm actually filing taxes and I'm onboarding new clients, and I don't know where to go next. And usually there's a little bit of a fear factor there. Like, do I upscale? Do I grow? Do I keep it maintain? Those are typically the ideal time to start working with somebody.
Mhm. Awesome. So with these business plans, like how often do you typically see your clients going and reviewing them or making changes, or something like, hey, every morning you go to work, you like have your business plan up and you're kind of following like a checklist, or is it like quarterly? What does that typically look like?
Once it's developed, it's usually a kind of a quarterly check-in. See, unless there's some major life change that happens with them, opportunity. Say I wrote the business plan and 2 months later, the opportunity comes to buy out a competitor.
Mhm.
And obviously that wasn't in the business plan. It just kind of got presented. All of a sudden, they found out this competitor was retiring and they want to pass their book off to them. Okay, let's look at the business plan. Let's see, do you have the systems in place behind you, the bookkeepers, the payroll, the HR, those kind of systems in place to handle buying somebody out or taking that over. Just because it's a great opportunity doesn't mean it's the right opportunity, right? And I've seen clients, but people I know through different areas that have decided not to buy because it just didn't make sense. It would have been too much for them to handle. And you can only spread yourself so thin, right?
So what are the key areas that are covered in a business plan?
So it's a pretty in-depth document. I mean, it's an easy Google business plan. You'll get all sorts of outlines, but financials, projected financials. I always do the projected financials, and then I also do best case. The banks like seeing worst case, doomsday kind of approach, and see that you're still going to be able to pay them back. They like that.
Mhm.
They also like to see best case, and clients usually like to see best case. So there's definitely in-depth business financials in there. Some of the other pieces that are covered, everything in marketing. Again, I come out of education, so everything in marketing always comes back to the 4 Ps. 4 Ps of marketing: product, place, price, promotion. Those are the 4 Ps of marketing. All four of those are in depth covered in the business plan: product description; place, where is it going out, what are your channels; promotion, marketing, how are you going to get the word out about the product itself; and then the last one, I guess, is place. That I couldn't remember which way I was going, but place: are you click and brick, are you online, are you face to face, all those kinds of things. And as we develop those pieces and we come through it, hopefully we can identify, again, UVP, I mentioned it earlier, but we can identify your unique value proposition. What's going to be the best way for you to market yourself? And I tend not to take on clients, and I tend to be very skittish of clients that are price driven. I want to be the least expensive. That's not a good game to play. Personally, I don't feel that way. There's enough Targets and Walmarts out there in the world. If you're going to be price driven, if you're going to try to be the lowest price, eventually somebody's going to come out with a better, smarter mousetrap, and that will do you, right? So I would rather say, let's identify something about your product or your company or your offer that we can upcharge and actually add value rather than be the cheapest, right? So, and
Yeah.
just a quick example with that, Payless shoes forever, right? It was the place to go buy your 6-year-old shoes because you knew they're going to outgrow the shoes in 3 months, right? So everybody went to Payless shoes, but then eventually Target and Walmart figured out we should get into the shoe game. And so now not only buy shoes, but you can also get diapers, get your hair done, buy your groceries, do your banking, everything else that Walmart offers. And Payless shoes couldn't compete with that,
No.
right? So they were one-stop shopping for shoes. And if you have 2 little kids in the car, you're going to go to Payless shoes, then put them back in the car, then go to Walmart, or you're just going to get your shoes while you're at Walmart.
Right.
And look where Payless is now. They're struggling, right? They were just so price driven.
When a client of yours is working on a business plan with you, what of those kind of key areas you mentioned seems to be the biggest challenge, or people have the greatest difficulty with completing and thinking about and getting that onto the business plan?
Sort of answering the question, but a little bit of a different way. So price tends to be the hardest. Business owners typically don't see value in as much value in what they're doing as other people do. And they're usually undercharging for their services. And it's building the business plan out and truly building out the products and services section of it. And then again, part of the SWOT analysis is threats, looking at your competitors. Okay, so what do you differentiate yourself with your competitors, and how can we leverage that to increase your pricing? Smarter, not harder, right? If we can figure out how you can charge more, you don't need to onboard necessarily as many clients, or you can scale up quicker. And
Right.
it's a mind shift for a lot of my clients to realize I should be charging more.
Mhm.
Go back to my example of John. He and I, again, I wrote this plan during COVID, but he and I just had this conversation like 3 or 4 months ago. We had breakfast. He's like, I think I got to start charging more. And he hadn't raised his prices since he opened his doors. And I'm like, John, you're a known commodity in the town now. He won best of 3 years in a row. Best bar. I'm like, best of equals dollars. Like
Yeah.
you should be charging more. Another client that was an attorney that she had been open for 5 years and she had never raised her prices once. Forget cost of living and inflation. You have 5 years of experience and you have not raised your prices one time.
Right.
So it's getting my clients to understand that what they do has value and charge appropriately.
How do you, so I hear this quite frequently. People will say, man, I need to raise my prices. Cost of everything has gone up, but I'm worried I'm going to lose some of my longtime clients. How do you address that concern?
Tell the clients, part of it is explain to the client the value you're bringing to them and the benefit they have in having you. And I'll go back to my example with the attorney. It was a hard letter for her to write. I think she had 34 clients at the time. And she made a pretty big jump. She went up $50 an hour. That was a big jump. And she was very, not fearful, but she was very concerned about sending that letter out. And I'm like, if they see what you're doing has value, and if they see what you're doing you're doing it well, they shouldn't mind paying the extra, especially the clients you've had for a year or two going through the divorce process or the family law process. And out of the 34 letters she sent, 3 of them said, I'm taking my business elsewhere. And it was actually her 3 most difficult clients. It was the clients that if she could have gone through her roster and picked 3 to dump, they would have been the 3 to lose. And I'm like, good, they did it for you, right? So she turned over all their files. They said, good luck, gave the retainer back, all that kind of stuff. And within 2 weeks, 2 of them came back.
Wow.
Because they started price shopping. They started figuring out her $50 increase actually was on par with what everybody else was charging. And not only that, one of them came back and said the first thing the new attorney said is, I need $2,000 just to read the file to get caught up.
Wow.
Forget the retainer. I just need $2,000 to get caught up on your case.
Right. There's huge value in the relationship of that client that's already been built.
Right.
Well, we're getting out of time here. Joe, really appreciate you being on the show here. What is the best way for people to get in touch with you? And, what kind of offer might you have for people that are getting in touch with you who are watching this episode?
Right. So phone number 603-731-0693. Again, 603-731-0693. Or you can email me. It's pretty straightforward. It's info@joewalkermarketing.com. info@joewalkermarketing.com. And if you're interested in the business plan, as we're coming up on the new year, Q1, usually, again, New Year's resolutions, people start looking at that kind of stuff. If you mentioned the Workergenix or you mentioned that you saw me with Harley, I will give you a 10% discount on the business plan.
Awesome. Thank you so much, Joe. It's been great having you on the show and hearing your wisdom with business plans. I encourage everyone who's watching to reach out to Joe, get that business plan in place. Not only does it help you get funding, it helps you have a more successful business, and also thinking about that exit plan. If you're looking to sell or partner, having that written business plan is going to make it a lot easier and increase the value of your business.
And let me also just mention the first meeting is no charge, like just connecting and seeing if it's a right fit. I'm not going to bill you for that. So
perfect. All right. Thank you, Joe.
I appreciate it. Thank you.